So, you're wondering what's happening with child benefit in 2026? Well, you've come to the right place. We're going to break it all down for you thanks to this brilliant guide put together by the experts over at My Tax Accountant. Let's get into it. Okay, let's kick things off with a question that, well, it might make you sit up and listen. Could a simple family holiday, a trip abroad, actually stop your benefit payments? Cold, with no warning? It sounds crazy, but it's a reality that thousands of families have had to face. And look, this isn't just a made-up scenario. This headline from The Guardian back in November 2025 really blew the lid on a massive problem. It showed just how fragile the system can be and, honestly, how high the stakes are for all of us. It's a stark reminder of why knowing this stuff is, well, it's not just important, it's absolutely critical. Okay, so here's how we're going to tackle this. First, we'll look at why the system is under so much pressure. Then, we'll get into the nitty-gritty of the 2026 numbers. After that, we'll zoom out to the bigger picture, see what's coming up for family support, figure out how to navigate it all, and finally, cover your next steps. Right then, Section 1, a system under pressure. Let's dig into those hidden risks to your payments, shall we? So you're probably asking, how on earth did this even happen? Well, it started with good intentions, I guess. HMRC wanted to crack down on fraud, so they started using travel data from the Home Office. But the data was a mess. It was incomplete. It was flawed. You had family holidays getting flagged as people moving abroad for good. Can you believe it? It even hit people who'd booked a flight but never actually got on it. And the worst part, the real kicker, they suspended payments first and asked questions later. Or not at all. The stress this caused for families was just immense. And this wasn't just a handful of cases. We're talking about 23,500 payments suspended. Just think about that. That's thousands upon thousands of families suddenly left without that vital support, all because a computer system got it wrong. If this whole mess teaches us anything, it's that you can't just sit back and assume everything's fine. Staying on top of this stuff, really understanding how it works, it's absolutely crucial for protecting your family. Okay, so with that context set, let's move on to the practical stuff. Section 2, the 2026 Essentials Explained. This is the what you need to know right now part. Right, the headline news. From April 2026, the new weekly rate for your first or eldest child is going to be £27.05. It's a welcome little boost that should give families a bit more breathing room. And for every other child after that, the new weekly rate will be £17.90. Again, that change happens from April 2026. So here you can see the old rates versus the new ones. But the really interesting part is why it's changing. This increase, which works out to about 3.8%, isn't just a number plucked out of thin air. It's actually tied to inflation from last September. The goal is to make sure the benefit doesn't get left behind as prices go up. Okay, let's put this into real-world terms. Meet Sarah. She's a freelance designer in London, and she has 2 children. For her, these new rates mean she'll now get £198.60 every 4 weeks. Now that is a tangible amount of money that can make a real difference to the weekly shop or help buy a new pair of school shoes. But what if you're a higher earner? This is where things can get a little tricky, and it's a trap a lot of people fall into. Right, we need to talk about something called the High Income Child Benefit Charge, or HICBC for short. It's basically a tax charge, and it kicks in if you or your partner have an individual income of over £60,000, £200. Now, the crucial thing to grasp here is that it's based on individual income, not your total household income. This is super important, so stay with me. So how does it work in practice? Well, once one of you starts earning over that £60,200 mark, you begin to pay the charge. It's a sliding scale. For every £200 you earn over 60 grand, you have to pay back 1% of your child benefit. By the time you hit £80,000 in income, you're effectively paying back the whole lot. Okay, lean in for this pro tip because it is so important. Even if you know you'll have to repay 100% of the benefit, you should still claim it. Why, you ask? Simple, because claiming protects your state pension credits. The act of claiming, even if you choose not to receive the payments, means the non-working or lower-earning parent gets their national insurance credits for the year. Missing out on these can seriously damage your future state pension. All right, let's take a step back and look at the bigger picture, because this is about more than just cash in your bank account. It's about tackling poverty. Now, this might surprise you. Take a look at this.
We often have this image that child poverty is mainly an issue in families where no one works, but the data shows something completely different. A massive 71% of children in poverty are in working families. Let that sink in. It proves that a job isn't always enough to lift a family out of hardship, and it's why a universal benefit like this is just so vital.
And this picture, it just grounds it all, doesn't it? This isn't some abstract problem happening somewhere else. It's happening right here in communities and on streets that look just like yours all across the country. You see, the long-term cost of child poverty is just staggering. It affects everything: mental and physical health, how well kids do in school, and even their future earnings as adults. All of this puts more and more pressure on our public services, like the NHS, and it ultimately holds back the entire UK economy. So, Ellie, tackling this isn't just the right thing to do, it's the smart thing to do. So, what's next? Let's look ahead at the future of family support and see what else is on the horizon for 2026. Okay, get your diaries out. There are a few key dates for 2026. April is a big one. That's when the new child benefit rates kick in and a new crisis and resilience fund goes live. Then, come September, free school meals are being extended. Big changes. So this Crisis and Resilience Fund, what is it exactly? Well, it's a new £1 billion a year pot of money for local councils. The idea is to give them the resources to provide immediate help to families who are hit by a sudden financial shock. And what's really good is that it replaces older, more temporary schemes, bringing everything together. And this really marks a shift in thinking, moving away from those sticking plaster solutions and short-term extensions. The aim is to create a more stable, proactive support system that's there when you need it, which is great news for local communities. Okay, let's pull all of this together. Section 5 is all about navigating these changes. These are your key takeaways.
So to recap the absolute must-knows for 2026. 1. Benefit rates are going up in April. 2. Remember those high-income charge thresholds. It starts at just over 60 grand. 3. Always claim to protect your state pension, even if you earn too much to keep the cash. 4. After what we've seen, double-check any letters you get from HMRC. And 5. Keep an eye out for that broader support, like the new crisis fund.
And here's another did you know, just to really hammer this point home. When you claim child benefit for a child under 12, it builds up your national insurance credits. You need 35 qualifying years for the full state pension. Not claiming could mean you miss out on years of credits, which could literally cost you thousands and thousands of pounds in retirement. It's a mistake you can't afford to make. So after all that, with a system that can get things wrong and policies that are always shifting, how can you really make sure your family is secure? Well, that brings us to our final section, your next steps. Because sometimes navigating all this means getting some expert help.
Okay, a quick but important legal note. Please remember, the information we've talked about here is for general guidance only. It shouldn't be your only source for making big financial decisions. Everyone's situation is different. For professional advice that's tailored specifically to you, get in touch with the experts at My Tax Accountant. You can call them on 020-570-8531 or drop them an email at info@mytaxaccountant.co.uk. And for more updates like this, make sure you subscribe to their YouTube channel. Thanks so much for